Welcome to mindyourinvestment.com. My name is Siddharth, and in today's video, we'll talk about technical analysis part 5. So we already covered part 1, 2, 3, 4, and you can find all the links in the description. First watch that and then watch this one. So in today's video, we'll talk about two basic technical tools. One is a bar chart and the other one is a line chart. So these are the two technical analysis charting tools that we need as a beginner to learn. Once you understand these two charting tools, it'll be much easier for you as we move on to the candlestick chart. So let's start the video today, and I hope that you guys have fun watching it. So before we jump into the line chart or the bar chart, it is very important that you understand another concept of the stock pricing. So in technical analysis, there are 4 distinct prices. One is the opening price, one is the high price, one is the low price, and finally the most important, closing price. So in this example, we look at a day's price movements. So now if we talk about the opening price, so when the market opens at 9:15 a.m., the first price which is recorded during that period is called the opening price. Similarly, if we consider a week's time frame, whatever price is on the first day of the week, we'll consider as opening price. Similarly, in a month's time frame, the first price of the month will be considered as the opening price. Now we talk about the high price. The highest price of the stock during the market trading time, which is from 9:15 a.m. to 3:30 p.m. Now, the highest price that is recorded of a stock during that period is what we call the high price. Now, in a day, which is usually between 9:15 to 3:30 p.m., which is the trading time, the highest price the stock will register is what we call the high price. Similarly, in a week's time frame, the highest price the stock will make during that entire week is what we call the high price. Now we talk about the low price. The lowest price of the stock during the market trading time, which is from 9:15 to 3:30 p.m. Whatever the lowest price is recorded during that entire period will be considered the low price. It will be the same for the week and also for the month. Whatever is the lowest price registered for the entire period will be considered the low price. Now we talk about the most important price, and that is the close price. The price at which the stock stops trading when the market closes at 3:30 p.m. Now this is the most important price that we have to remember, because usually what we refer to with a stock is the closing price of that period. As in, if you ask me what is the price of Tata Motors, I will only tell you the information of the closing price and not the opening price or the high price. So closing price is one of the most important prices that you have to use in the stock market, and specifically in the line chart that we learn in the next slide, the closing price plays the most important role. So now we look at what is a line chart. Now in our previous videos, we already shown you a few examples of a line chart, but in this part, we'll learn what is the basic concept of a line chart. So a line chart is the most basic and simplest type of chart that are used by technical analysts. The line chart is also called a close-only chart, as it plots the closing price of the stock or asset. So what this paragraph is trying to explain is that the line chart is the most basic and simplest form of chart. And a lot of traders, even the professional traders, use this chart for trading. They generally use a line chart as a secondary chart, but they definitely use a line chart as a backup. Now, the biggest advantage of the line chart is that it is a closed only chart. This is the biggest advantage of the line chart because this is very unique. There are no other technical charts available which only uses the close only price of a stock. What I mean by close only is that this chart will only consider the asset's closing price for the period. As in, during a day from 9 to 3 o'clock in the afternoon, the stock's price will move in different directions. But this line chart will only focus on the stock's closing price for that period. So this is the biggest advantage of line chart. However, the line chart does not indicate the highs and lows, and hence they do not indicate the price range of the session. Like I said earlier, this line chart does not consider the price range of the stock. As in, whatever price movements the stock showed during the day, the week or the month will not be shown in the line chart, and only the closing price will be shown, and that is the most important part of the line chart. Line charts are still favored by numerous traders who agree that the closing price is the most important data and are not concerned with the noise created by the price spikes and minor price movements. So this is another important point, that a lot of professional traders still use line chart as a secondary chart. And this is one of the biggest advantages of a line chart, that it does not consider the price movements of the asset and only takes into consideration the closing price. The line chart will eliminate all the noise that is created by the price spikes and minor price movement. And this is where line chart takes a big advantage over other charts. Now let's see how the line chart is plotted. So if you remember the first video that we made, the introduction of technical analysis, we explained the price of an asset by plotting it in a histogram. So here also in figure A on your left hand side, you'll see the price of an asset is marked in the red bars. And the prices on top, let's assume, is the closing price of the asset. So on day 1 it was 90, day 2 it was 100, and so on, it went to 105. So this price is just the closing price of the asset and is not considering the highs and lows of the price. Similarly, on the figure B on your right hand side, you will see what we did is we plotted the entire bar with a white line. Now this white line is basically a line chart. The white line can help us identify very easily what the trend of the stock is and the direction of the price movement. So that is the biggest advantage of the line chart. Now let me show you a live example of a company, Reliance Industries, and here you can see the line chart is plotted in blue. Now here you can see that all the specific closing prices for that period are marked. Now with that, we can easily see that the stock is moving in an uptrend, and that is the basic purpose of the line chart. It helps us identify easily what is the direction of the price of the stock without taking into consideration the noise of the asset. So now we talk about what is a bar chart. Now this charting concept, if you understand properly, it will be much easier for you to understand candlestick charts, which is on the next video. So one of the basic charting tools of technical analysis is the bar chart, where the open, close, high, low prices of the stock or other financial instruments are embedded in the bars, which are plotted over a specific time period. So what this paragraph is trying to say is that this is one of the basic charts of technical analysis, where all the 4 prices, the open, low, high and close, are plotted. And this gives us an idea about the entire price dynamics of the stock for that period. And this is very useful for technical analysis in a much deeper way. However, bar charts are not very commonly used while trading, as they are simple in form and are also identical to candlesticks. So candlestick chart is the primary chart that we will use for technical analysis. Bar chart is very similar to candlestick chart, but since candlestick chart is visually more appealing, we generally use candlestick chart. But for us to understand the candlestick chart, it is very important that we also know about the bar charts concept. Bar charts are often referred to as OHLC charts, as they allow traders to identify the price dynamics easily. So OHLC stands for open, high, low, close. And since the bar chart shows us all the 4 prices, it is easier for us to do technical analysis because we get the full picture of the price dynamics of the asset very easily. So now we look at how is a bar chart formed, and this is the most important part of this video. So I would like you guys to pay full attention while watching this, and if required, take a pen and paper and write this down as we go forward in the video. And definitely pause this slide if you have any doubts and look at all the things that I'm explaining. So the first information that you require to understand bar charts is that there are 2 types of bars. One is a green bar, which shows that the stock during the trading session showed a buying momentum. And similarly, there is another bar which is called the red bar, which suggests that the stock was showing selling momentum during the trading session. So let's look at part 1 first. Now in part 1, you will see that there are 2 prices. One is an open price, which is given at 100, and then there is a closing price given at 105. So these prices are plotted in horizontal lines, and the open price is plotted on the left hand side and the closing price is plotted on the right hand side. So these prices is giving us the range of the stock for the opening price and the closing price. So during the trading session, this was the recorded open and close price of the stock. Now if we look at part 2, we'll see the stock's high and low price for the trading session. The high price of the stock during the trading session was at 107 and the low price was at 97. Now if in part 3 we combine all the prices together, we get to see a proper bar. Now here you'll see that let's assume the company opened at a certain level. From there it fell down to a low, and during the trading sessions it went up to a high, and finally it closed at a certain level at the closing price. So this bar is showing us all the four prices: the open price, low price, high price and close price. And that is why we call this an OHLC chart, because we can analyze a stock's all price data together in a single bar. And now if we see part 4, you'll see the prices. So we are assuming that the opening price was at 100. From there, the company's share price fell down to 97. And during the trading session, it went up to a price of 107. And finally, it closed at 105. So what this green bar is showing us is that the company's share price opened at 100 and closed at 105. And these are denoted by the horizontal lines. And with that, we can concur that the stock showed buying momentum because the closing price was higher than the open price. And that is why the color of the bar is green in color. And along with that, we could also see the low price and high price of the data. Now, if we look at part 5, which is a red bar, this will give us a different kind of idea. Now here you'll see that the company's share price opened at a certain level, then it went up to a high. From there, during the trading session, it went to a low price, and finally it closed at a price which is lower than the open price. Now this is why the candle's color is red, because here we see a selling momentum because the closing price is lower than the open price, which means that during the trading session, the share's price didn't grow much higher, rather it fell down, and that is why the bar is red in color. Now if we look at the price data, which is in part 6, we can see that the opening price was at 105. From there, during the trading session, it went up to 107, made a high there, then fell down to 97 and created a low. And finally, from the low, it went up to 102, where the stock closed. But if you compare part 6 with part 4, you'll see a difference. In part 4, which is a green bar, you can see that the opening price is lower and the closing price is higher, which suggested that the stock went up during the trading session. Similarly, in part 6, you can see that the opening price was 105 and the closing price was lower than that at 102, which suggested that the share fell during that time. Hence, green candle is always showing us buying momentum and the red candle is always showing us selling momentum. So this is something that you have to remember. One more thing which is very important for you to remember is that always remember the open price is plotted on the left hand side with a horizontal line, and the closing price is always marked on the right hand side with a horizontal line, and the low and high prices of the stock is marked in a vertical line. Combining all of them together gives us a proper bar, which is what we analyze in technical analysis. Now if we show you a live example of Reliance Industries bar chart, you will see that the company's share price was in an uptrend during the trading sessions, but you can see certain green candles and you can also see certain red candles. Every time you see a green candle, the company's share price went up, and every time you see a red candle, the company's share price fell down. So that is the objective of looking at the bar chart, because this allows us to first look at all the price data of a stock and also gives us a better idea of what the direction of the stock will be later on based on the current bar color. Thank you for watching today's video. I hope you had fun watching it. But if you still have any doubts regarding today's topic, quickly pause the video and go in the description and write whichever doubt you have in this topic. Along with that, don't forget to hit the like button and the subscribe button of this channel. And if you want to get the latest notification of our channels, don't forget to click on the bell notification. And I'll see you guys in the next video.